Good morning. Welcome to OptionsTender. We're going to do the weekend edition. Happy Mother's Day to everybody. Yesterday, sorry I didn't get this out earlier. We had we hung out with our family, disc golf and volleyball, stuff like that. So really fun. And now it's back to business today. And I'm really glad we actually got to see this this next bump up in the market. Now we can do this higher time frame analysis and see what you think could happen next. Now, clearly, from the past analysis, we are in the rejection box that I've labeled, and we still have a little bit more room to the upside. And I'm going to show you that our wave count on the minute level looks incomplete, so make sure you stick around. We'll go through the 65 and play this at 1.25 speed or 1.5 because we have a lot to go through, and I don't want you to miss any of this. Just trying to pick out the scenes that you want to hear from. Okay, so this is options expiration week. This is going to be extremely volatile, so those of you think that the market is going to go straight up, not necessarily the case. It should be up, it should be down, it should be all over the place, and we will expect that, okay? So we're doing this intraday about noon Eastern Standard Time, so if you want to get these videos intraday, consider becoming a YouTube member. It helps support the channel and lets us do these videos often. So let's jump into it. We have SPX on the monthly time frame, and let me mention real quick that the options expiration, we said that we'll have extreme volatility, and I put a note on here that the gamma unwind. So we're going to have a lot of positions unwinding this Friday. So perhaps not a whole lot of stuff happens. Maybe big swings up and down, but we kind of end up in the middle. That might be a possibility. We'll see. But after this week, the market should be released to do. I'm not going to go into the details of how that works, but it's if you want to study those kind of things, gamma is what you look up. And with that unwind of these of the options market, the market should be able to move on its own once again. So, all right. We have an options expected move of 132 points, not biased to the upside or downside. I believe we're already above that. So check mark that one. And in most scenarios, I wouldn't say that price could get back down to the lower end of the options expected move. This is the expirations week and things are crazy. So we could see the lower end of it as well. So make sure that we'll mention this. We'll also look at the structure. We've had this on here for a long time. We're positive. There is no negative market structure yet. We had one move to the downside, and we're looking for a lower high. And then once we make a new low, then we actually have a negative structure, and that's on the higher time frames. Okay, so I do believe that we're in a wave 2, but in the alternate scenario, we're still in wave 1. All right. So we'll take a look at that as well. Let's jump into it. We have the monthly time frame. We look back to 1929. We had a top here that matches with this trend line top here at 2000 and also into 2025. That's why we're getting the hard rejection there. You can call it whatever news you want to that made this happen, but the technical analysis, it played out the way it was supposed to. Okay, and from 2008 to 2022 high, into the 2025 high as well. Okay, so on the monthly time frame, we're into, clearly the month isn't over. We're almost mid-month, and we're right into that 8 EMA. We're pushing at it. We're trying to push above it and peaking there. So do we get a rejection off there? We'll have to check it out at the end of the week again. So far, this is we're still getting a lower high. Do we go and create a divergence? Well, let's get there in just a second. Let's do the DMARC. So you saw the moving averages. demarc 3 count. Do we get that 9 count? The only way to invalidate this is to go 4 candles, to close 4 candles before. 1, 2, 3, and 4. This is where it starts. And, you know, I don't think we're going to get up there and close up there and negate the count. I think the count's going to continue. Then we have a 3, 4, 5, 6, 7, 8, 9 heading lower. Now with the MACD, we're starting to get that bearish cross. We have the histogram that's red to the downside. This is one reason why I think that the bear market is starting. Now, if price does manage to make it back up to those historic trend lines just above, then that's going to create a negative divergence here in this move. And that, again, I'll preach and preach that we're going to head lower, even if we make a new high there. Just telling you that now, because that will be a divergent high, losing momentum. And we had that divergent high here on the RSI already, and the slow stokes already playing out. We're not in negative territory on RSI. We're actually past the neutral point. We're pretty much at it, and we're just back testing at the slow stoke, not getting that crossover yet. So we'll continue to look at these and see how they develop. Let's go to SPY. All right, we'll take this is basically the same picture. We just don't have the information going back all the way to 1929. We can show the volume profile. Didn't make it there. Nothing to see here. I still think this unfinished business that we go down to this profile. Just thin air in the monthly time frame until we get down to 450s. And then if prices to continue to the downside in a wave 3, then, you know, we may see some big bounces here, but over time, we should go test the lows of this previous wave 4, in my opinion. Okay, let's go to ES. We're doing ES for a reason, and I think down in the daily time frame, you know, it says a lot. So jumping back and forth from futures to cash could sometimes give us a lot more information. So here's the monthly time frame. Had that rejection. Looks the same, right? Well, we do have a channel that's going to play out eventually here, and put on that right extension. So this what kind of looks like here. I had these lows in here. I was attaching all the lows to see if we could find a low, and it just really worked out with all of these, and it worked out with this low as well. So, you know, still in this range. I do think that eventually breaks, and we do have this trend line up here if price does go a little bit higher. So same kind of information so far. Let's go to the Qs. There's our look at the Qs. Same thing, wedge, but now we're back into this pivot here from 2000 to 2025. So we'll see how that reacts off of there. SMH. Okay, lower highs so far. Back to the consolidation area where price broke down from. So that's pretty significant in itself. I will... On the monthly time frame, we don't have a whole bunch of lines on here, but this one matters. And if you see the zone here, you have a rejection here. So we have support, resistance, support. Even though these are huge wicks, support, holding on to this zone. It's such a big area that we're at right now. Support all the way across here, all of these. And then finally, a rejection. All right, and that brought us into this first bear market move here. So we're at an important level. We went short on NVIDIA today. We added on to those shorts. So I do think if this has anything to do with it, then it's going to play out. IWM, the weaker of the markets. It finally made it to the 50% retracement of this move. So I think that's going to be significant in itself. And here's our big picture. Since we're on the monthly time frame, I'll show you exactly what we're looking for, so you know when and if it starts to roll over. I think this makes all kinds of sense. I think this is going to be the weakest of them all, but we're looking for an expanded move here. We have an A, expanded B that made a new all-time high, and we had our first wave in. We're into wave 2. Does it go higher to 618? I mean, this is the golden pocket. Absolutely it could, but it seems to be the weaker of all of them. And I think we see it wave 3, 4, 5, and this might even bottom before the rest of the market. Okay, so this into C wave, and it's possible that we can get to the 162. That would bring us all the way back down to test the lows of the previous move in 2020. That would be the Corona crash. Okay, DIA. All right, pushing against this pivot here, trying to get back above it. We'll see how the month ends. We are back into same thing as the SMH. All right, let me mark this here. Did I think that price was going to make it this far? I did, but I didn't think it would happen all in one shot like this. So I think this is a sharp move. I think we reset the indicators, and I think that this continues lower. VIX. All right. Well, we were talking about the VIX here on the monthly time frame, getting back test this consolidation area, clearly back in here. And so we're getting back to the support resistance zone right here at 19. And 19 is going to seem more obvious as we go down to the lower time frame. So we're right into that zone. By the way, the VIX is down 13%. That tells us we're probably going to have at least a correction in the overall market in the next 2 days. So that's what the probability there is. Now we're in a rising phase. After this correction, I think that we continue our ascent to the upside. Let's go to SPX on the weekly. Get through here quickly. So weekly time frame, let's add on some moving averages. So we're above. Here's the huge question. This is the number one question. We're putting so much emphasis on this 20-week moving average that we're above it. Okay, in one straight shot. Now, if you go back, and I'll post this video so you can look at it. If you're new here at 13:30, somewhere around 13 minutes after this, up above, and it was the kiss of death. So we're clearly having the kiss of death right here, in that if you put the weekly bar, it's still one bar. I know that we have a gap up here on the weekly time frame, but we're above it. Do we hold? All right, a break back underneath, is just as bearish, or if not more bearish, for the kiss of death, and then a break below. I was thinking that we'd get a rejection off of some point, the 62% retracement. We test the lows, and we get a higher bounce to those levels that we're at now. Since we did a direct shot here, I no longer think that is the case. Now, we're going to put a resistance point right here, because we're back into the territory that we broke down from. Okay? This was a big spot. We had this price action creating a top here with distribution, and you see the resistance, support, even though we whipsawed through it. It's a fake break, got us back to all-time highs, support, and we finally broke down. And I know that in the Discord, somebody was calling kiss of death here. All right. To me, that's just such a small time frame. Yes, it means the same thing, I suppose. And then we had a breakdown, a crash from there. So, you know, kudos to that. But I think the real test is when you actually have the breakdown, and now we're back testing it. Okay, we're above it. Let's see if price. I'm gonna make a wild guess here, and if price gets above this resistance and holds on to that, then we're gonna make all-time highs. There's just nothing really stopping it at that point. It doesn't change a whole lot for me, even if the new highs are made. I think the bear market continues, and I will label this the 2025 bear market part 3, because I think we're at our turn here. And let's see if we hold above. If we fake break above here, I think just a lot of things are pointing at that this move is just about done. We're at resistance. What we're looking at, if price reversed from here, now there's a little room to the upside, just a little, and I'll show you that. Here's the initial move for wave 1. Here's your wave 2 retracement. And then your 1618 would be your target. So that's the 37.26. It's not the end of the move, but that is the end of wave 3. Very typical for that to happen. That's the test of this correction here, these lows. I think ultimately the price goes lower, but that would be the test right into this range here. You have great support at that point. So 37.26 would be our area there. Let's put our DMARC on. So we're in a 1, 2, 3. We're counting so far. Let's see if this continues. Here's our options tender look here. Now this is super important. This weekly time frame is going to be so important, right? We had our breakdown here. It's where the MACD crossed over, negative divergence. We made a brand new all-time high while momentum is falling. Momentum, you see the histogram, is just about to zero. It's trying to test a bull breakout. If we get that crossover, which in my opinion we'll need to at least correct first, and then if we get a crossover, hey, maybe that's a weekly crossover, and then we see all-time highs plus even higher at that point. Okay, that would be a big deal on that bullish crossover, but we're still in bearish territory with plenty of room to the downside, and we're not crossed over yet. I know this correction has been huge, but it didn't reset the weekly time frame for a bull cross. All right, so we're back up into bear market territory. This could easily be a high here. It doesn't have to make it to 70. All right, so plenty of reset on the RSI. We're oversold, extremely oversold. Now we're in a position where price can reverse. We'll see. This is, again, headed to the upside. Tailwind is to the upside. We'll see if we get some sort of crossover here coming in the next few weeks. All right. Volume. All right, let's go to SPY. Okay, and so you can see easier on the monthly time frame right there. We have that boxed area. We're back at that box right now. Okay, let me change board, see if we have something highlighted here. Okay, so on the weekly time frame, we don't have the box here highlighted like we do on the monthly time frame, but you could see exactly from SPX what we're doing. We're looking at that megaphone. We got back in it. This isn't really going to help us out in any way at this point. Looking for a lower high. That's all we're doing right now. And then I have this highlighted area down here. That was if price wanted to break down directly from that point. It's still going to be an important area. So what could happen is if we get into a wave 3, and this is a wave 2 correction, then this will be considered testing the lows. We'll probably break the lows and get our nice bounce before heading lower. Okay, so this still, even though we didn't get directly there, this will still be a significant area where I think price gets a nice size bounce after falling for a intermediate wave 1. So we'll call this primary wave 1 into primary 2 into it intermediate 1 into 2. It may not be as deep because we now have breached the lows and price continues lower. That's what we're expecting. For volume, we're looking at this volume node right here. Okay, we're getting just above it. Not a whole lot of action going here. Maybe the next one's up top here. I don't know. We're just above that node there. You saw we breached. We held on to this one. I know it looks like price whipped down through this empty gap here and just missed that node here. That's where that support is. So we'll see if we reverse from this point. Not a whole lot to, there's a little node there, but not a whole lot of screaming reversal here looking from this point of view. All right, let's go to ES. And if you use all of this information, I know it takes a lot of time to do this, but when this does happen, it all comes together. And anyway, I'm not going to go through this. So we have our GAN lines here. We are not only in time, but we are in price. All right, we're just above. This is a huge chart right here. I know that price is above. You can get your reversal from here, or you have just above where it could peak out and then fail. But we're at time as well. So this is a very important week we have here. We could have a topping candle, and next week let go of price. So don't think that this putting in puts right now on a into Friday or into tomorrow are going to work out. We don't know that. This could be a reversal candle on the weekly time frame, but this is a huge, and if you don't understand GAN, which I'm not good at, this is not necessarily my work, so I can't tell you exactly where they put it, how they got it, but those guys are fantastic. Plus the Refuse is the YouTube that you could check it out. Resistance acting as support at this point if you're looking at price action, but we're in the zone for time and price to reverse here on ES. So super important area that we're at. Okay, looking at the Qs. The Qs, bearish rising wedge, broke down from the wedge. This is a back test. And guess what? We're right back at the boxed range. Did I think we'd get there? Again, not in one shot. I thought this was going to play out a little bit. It just went directly there. Good for all of you if you held strong. We're looking at SMH on the weekly time frame. And I forgot to put the moving averages there, but you have you have resistance here. Now, that's a good resistance. But I think the more important one would be getting into this cluster, and you saw that on the monthly time frame. So we're right there at it. Here's the moving averages. We're at the 50-week moving average curling over there. All right. So just time to be cautious. IWM. Here's the same look from the weekly time frame on the Elliott wave. Well, we have the 20-week moving average. We're rejecting off of it. It's a 50% retracement as well. Huge area. There's a good chance that this move is done. All right. And look at that. How beautiful is that? You have this consolidation back here. Huge area. We're rejecting right off of that consolidation area. Support, resistance. Makes sense. So we should see a reversal from here. So this is a big zone looking at all these different weekly channels or charts. Weekly time frame for DIA. Thought this might work out. We gapped above it. It's not gonna mean anything for us. We're rejecting off of the 20-week moving average. We're back into this resistance zone. You see the resistance, support, 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 resistance, resistance, back to resistance. VIX. On the weekly time frame, we're into the 200-week moving average. We're back into this zone here, but again, there's that 50-week. Again, we're at 19. Resistance here, resistance all the way across, support. It's going to play as a good support here. Okay, 19 is the zone. We're at it. We're exactly at 19 right now. So obviously, price can spike through. It usually does for the VIX. SPX on the daily. So we kind of have to do our daily analysis here as well. So we're getting this shooting star right here with huge gap, and we're into that resistance box back here. But this is our zone, and this is comprised of not only the traditional technical analysis. Let me put my resistance support here. Yeah, support, support, a fake break. And we're directly at it right now. So there's a support resistance in there. It's a good zone. And we have a price just a little bit higher too, because that's from our fibs. That's our 786 fib just above. All right. So really price has to hold some of these levels. Bull or bear, and I'll show you on the 65. My gosh, you're gonna get a reversal. So if you're a bull, maybe we reverse all the way back down to back test the breakout and this good zone right here. All right, and then we head for wave 3. That's possible. Anything's possible, right? ES. So ES is speaking to us. It's saying a lot. Here we are again, ES. Back into this Gann square zone here. So price, we're not into time, but into price, rejecting off of it so far. It's a huge, huge area, 90-degree box here. But one thing that I want to note is that we had a gap, held it. They usually close pretty fast, but I'm not sure that I've ever seen two gaps, especially this big, open at one time. Okay, these are going to close. I don't know if it comes from a little bit higher. There's a good resistance up here too. I don't know if it comes from 5,900 or if we reject from here, but these are going to close. All right, and we're probably going to see a reaction at the bottom of this one because that's also square. All right, just want to show you that there's some things happening. At least if you're a bull, just be cautious at this point. Let's go to SPY. SPY on the daily. So we need to get that target for SPY as well. So we had this resistance here. It's just above. And so we have some room that we could head to. Let's change boards here. Well, let's look at our DMARC. We're still holding that 8 EMA, bursting to the upside. Got that 9 count, made a new high there. We're at a 2 count so far. Negative divergence on RSI at this point. Slow stoke, negative divergence. We have to see that roll over again, though. And we're getting into the bull territory here. No arguing that. The McClellan summation. We need to do that on SPX. And I don't have to, but my interpretation of the McClellan summation is on SPX. I have everything highlighted. This is my own custom look here. So we're getting towards the top of that gray area. We're just past the bull bear pivot. So price, I think, will probably reject from here, but we'll see what happens. Will we get into full-blown bullish territory? Well, I think, again, it's likely that we get a pullback first, and then we'll have to see what happens after that. So getting stronger. Breadth is getting a little bit stronger. It's at 2,085 right now. All right. So back to SPY. Here's that volume profile. So we're getting into the that node. That's easier to see on the daily time frame. So we gapped up through quickly through here, and so we're getting to resistance once again. It's a good thing to look at. And we're not on the same workspace, so I'll just go ahead and go to our target. Let's get this, where's the ending date? We're in a wave 2. Here's where I thought with price possibly rejecting at the 62% retracement that we'd get an A, B, C for a higher. That is not negated. Okay, it's just probabilities that it's not likely that we're going to catch a flat pattern after such a deep retracement at this point. So we're looking at right now an A, a B, and a C for wave 2 ending at this point. And now where's our target? You take the all-time highs, use your extension tool, and measure from, it could make it up to the 786, doesn't have to, so we could have the high here. I'll measure it so far from the high that we have right now. And I want to clean this board up because we're just looking for the 162 target, 162% extension. So we'll just highlight that. And we're looking at 367.70 being approximate. And that would take us to the lows of 2022. That test there. And that's not unusual for a pattern in a wedge formation to go test the lows of the beginning of the move. All right, so that's our wave 2 target. That's what we're looking at. We have to get a reversal. Again, we're not at any position to say, the reversal is happening from here, but probability is really starting to favor, at minimum, a pullback whether you're bullish or bearish. Let's go to the Qs. Same thing. There's nothing. We're right back at resistance again in this zone. You got a consolidation zone. You have the spike through here. And price could still make it up to this good spot here at 511. All right. You even have a downtrend if it wants to make it to the downtrend. SMH. Not in the daily. Got back into this megaphone. That's not going to really help us out anymore. So nothing to see there. And what we're looking for is a lower high. And these all match up on NVIDIA, where these highs are. It's a zone there. You could say it's holding on to. Whoops. So if we have that high to that high, we gapped above and we're holding on to this. I wouldn't consider that so much of a breakout, but we're at resistance here from this boxed area. And NVIDIA is exactly at the highs for each of these. So all we'd do is, if we saw new lows, all we'd do is really make this trend line like that. And so any bounce from that point would be, that sort of a resistance from the downtrend. So you could do from body right here, from body to top at that point. So we'll hold this here since we're at horizontal resistance anyway. This is a much better way to play things. We're in that resistance zone. And this doesn't change. You still just draw these around here. Just a wedge type formation. All right. So we're seeing a wedge into resistance. Here's a daily look for IWM. You have this downtrend here. Do we make it up just a little bit higher? It's possible. But again, we're in this resistance zone here. And you saw in the weekly time frame, that was a big zone. There's a really thick lines that we had here, but we're back into it. And so we could go a little bit higher. And going into resistance, again, it's just a wedge going into resistance. So the only thing that matters when you have these wedges are the trend lines. This is an official trend line with each touch, 1, 2, 3, 4, and so on. So that's a good trend line you have there. This is not. This is just forming the pattern. DIA. All right, still forming a wedge. And now we probably have some, symmetrical line or geometric line that I could follow from these points, possibly. We're into resistance. So take note of that. We're into resistance. And if you line up a couple of these tops here, gets us somewhere around there. I guess that works out. Here's the top, some body, some touches there. So that's fine so far there. Into horizontal resistance is the only important thing. We're not going to go through the whole thing on the 65. I'm just going to show you those scenarios once again. So we have this nice large wedge. We're right into support right here. And then if price breaks down from the 19, we do have this channel also in here, but we are in the lows, the territories of making a low. So keep that in mind. I think 19 is a good spot. So we'll see where we go from here. I was looking to close the gap at 21.45 and just gapped right over it. So, or right under it, I should say. So we'll see. Let's see where we can find a low. Let's see if we get some sort of doji eventually. We're at the 200, 200 moving average. We're spiking through it so far. Let's see what we get. Okay, SPY on the 65. Here's our leading diagonal if you're bullish. So we want to continue to monitor these. And I had it up to the 786. We still might not make it up there. But so far, if we do reverse from today, then I'm looking for a wave 2 pullback coming up here soon. All right, and that would be a 1. Oh, we're still on the daily time frame. Let's go to 65. And so this wedge, let me just bring that up here. So we have a 1, 2, 1, 2, 3, 4, 5, and that could be wave here, 3, 4, and 5, and we could be done. Some sort of consolidation. On the first glance, now I think this is more appropriate how it's counted here. Now we just had a very shallow wave 4 into the previous wave 4. But what I was looking at without seeing any numbers on here was this is a possible 1, 2, 3, and 4, and 5 to complete this. So if you're, it's funny because the counts, they work out together. This is a bullish count where you can count 5 waves up in here as a 1 2 1 2 3 4 5 4 5. All right, and we could see these the 786 turn out here. Now, what's going to be confusing to everybody is that it's going to look exactly the same as our bearish count. Okay, so unfortunately, that's how it works. That's why we have a market. You can look at it any which way. And so what we're looking at here is an A, B. We have a 1, 2, 3, 4, 5 for a 1, an expanded flat for a 2, and a wave 3, and a wave 4. And now here's the incomplete wave 5 the 5-wave move that I was talking about. And that's 1, 2, 3, 4, and 5. Now I could argue that because if wave 3 can't be the shortest. So if we take a measurement of wave 3 and put it down to the wave 4, 100% it should not make it to the 786 if this is to be a correct count. Now, I also had this counted before. Doesn't mean that this is all wrong. It just means the count might be wrong. So if this is a 1, 2, and we have a 1, 2, 3, 4, and 5, wave 3, and this was a wave 4 into here, and then this is a 1, 2, and you're looking for 3 in here, 4, 5. Then we have to have a larger wave here and probably a little bit higher after that. So that's the dilemma with counting these wave counts. So you could have a 1, 2, 3, 3, 4, 5 in here. Just yeah, not sure that that's gonna work out. We need to see this reject before the 100%, unless this is a 1, 2, 3, 4, 5. I think this was the best count, really. 4. Yeah. Anyway, trying to work this out real time with you so we can see how this happens. I think this is cleaner. ABC here. All right, and then you have your wave 3, which is shorter, but even if this is a nested move here, and we talked about this on, I think it was Friday's video, 1, 2, 1, 2, 3, 4, 5, 4, 5, then this is how the count will go. And so in here, you won't be able to see, you'll probably see a 1, 2, 3, and then a wave 4 in here, and then a slight new wave 5. And so what we'll be looking at for the MACD and these indicators is right now it's probably making a small divergence here. Let's go over to the traditional board so we can see our divergences. So we're still in a negative divergence for these. We made a new high here, so we probably want to see just a little wave 4 where we're at, and then just a lower high here with price making a higher high. And it looks like this gap is closed. So we closed the gap today. That's why price rejected. And we're getting a miniature wave 4, perhaps in the turnaround Tuesday. Maybe we make it up here or not. But the 585 would be a good spot. And maybe we see just a little divergence there that would help out with checking out a reversal. But let's take a look at this again tomorrow and see where we're at if this move looks like it's done. All right, what else can we look at on this time frame? That's it. I'm not gonna go through all the other, maybe just the VIX. And so we're at the support zone. I have two 2 lines drawn here, so we have some room left there. But this is our wedge, and then it just gives us the benefit of the doubt from this support here as well. So we have some room to go down if we need to. Here's the support area from 19. So let's see how price reacts around here. And now that I'm looking, I didn't realize that's what it looks like price is doing right here. So it looks like price wants to close this gap. So we might just spike underneath to close this gap right here and then start to reverse from that point. Okay. And, you know, if things really got out of hand, there's still a couple of gaps down here. Not sure that's going to happen. Not yet. All right, you guys, that is it. In tomorrow's video, we'll do Bitcoin and some of the other outliers. We'll do MJ and things like that, but we just don't have time in this one. We went through so many things here. So I hope that helps, and we will see you with 45-minute video. Zoom through it. We'll see you in the next video.